All right, here we go. 666, 333. Keep it simple. This is what a divergence looks like when you're looking at the average. Something that doesn't cross and it just comes and almost sweeps it and it scrapes the bottom and just runs. That's a divergence. Okay? Doesn't matter what you're using RSI, MACD, stochastics, it doesn't matter. This is your divergence right here. That's all we're looking at today. All this is covering is the 666 moving average. 333 is good to have for the divergence, all right? But it doesn't really require it, all right? It's a good thing to see and use, but you don't really need it. Okay, so overall, if you just let it ride above, you're in an uptrend. That's what trend will look like, okay? So we're talking about like trend is your friend until the end kind of thing. If you like to go off of that, then yes, your trend is your friend until the end. And the white moving average, the 666, keeps climbing up. And here's the key. This is what we need to look at. How do you know if the trend is going to continue? How do you know? You take a line like this, all right? And you run the line following this moving average. If you follow this moving average, you'll see that when you hit peak volatility of these entire areas where it was trading the most, where you had the most volume. Some people will call this like a profile of volume right here, to where you have a lot of trading in this area. When you reach that area, is typically your top of this, just so you know, all right? Because that's where the most volume comes back in. All right, let's go and see where this top was. All right, right here, where we reached the most volume right here. Obviously, this right here is different, okay? But we're not looking at that because we're looking at where the 666 started. You can back test this on your own time, somewhere on the 1 minute or lower time frame or whatever time frame you want, and you'll see the confluences with what I'm talking about. All right, this is why you have a divergence that started here, because this is exactly where it came to. So let's say right here, you see there was a lot of volume right inside of this range, from this high to this low, including this high to this low. There was a lot of trading right here. You go right to the middle. Let's see where this goes. I won't even look above. I'll take this vertical line and I will draw it right here since this is the center. Is this near the top? I'm pretty sure it is. Let's see. Let's see where we are. Wow, I'm damn near it, right? You see what I'm saying? It's damn near it because the volatility spikes up and I was damn near it. Let's see how close I was to it. Right here. It was the beginning of the run. Okay? So let's go off of this. So what did it mean? You can actually put it to that point, or you can run it up to where these highs were. Because if it was right here, you see where there was a slight bend in the 666 here? Let's go right up to the 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 typical one I usually go to is right here to where it's a breakout. So I'd say like support and resistance, flipping right here. Support, resistance, flipping to support, taking off, right? And let's even do this one too. Let's do this. And this is me going with you in real time so you can see on how this is. Okay, I've back tested this different times in different charts already. S&P, gold, everything else, all right? And there's certain patterns to it. And so right here, let's go look at, let's go with this line now and look at this level of support and resistance flip. We're just going off of the 666, all right? I'm not doing this 333, all right? Just the 666, okay? Now let's see where we are right now in terms of a top, okay? Wow, we pretty much caught a pretty good range of the top and the highs and the lows right before the end, okay? So you can consider this to be once it reaches the areas of previous resistances or even just breaking out. When the 666 breaks out of this previous resistances like this and this, okay, I would consider that to be an area. This is why you see things like this, where you see a slight divergence, right, in the 666. And what you just like, this is why I say that the 666 is kind of all you really need. Even affected the 333 to where you saw this slight shift right here. It's easier to see once we zoom in a bit like this. You see a slight shift. Sure, this is on a daily time frame. It's gonna be hard to follow, right? It's going to be hard to follow. But all you need to do if you don't have time to be at charts, this is the important part because you're not going to, and I hope that nobody spends that much time on charts unless you just absolutely are obsessed and you love it. Okay, I love it. That's why I'm at it. But in terms of this, if you don't have time, please set an alert. All right, set a goddamn alert for this. As soon as you see this breakout of this 21, set the alert for the 666 moving average breaking out of this level. Once you set that alert like that, you can walk away, all right? Because now you can see on how the outcome was when it was crossing over those highs, all right? So that's the 666. It's really that simple, okay? This is why I'm saying it's simple. Because once it does break out above previous, once the averages get above previous highs, you are now above average. You are now entering premium territory. Premium territory is where all the euphoria comes in. This is the Black Fridays that come in. Look at this. This is Black Friday that comes in. Once it reaches euphoria, this is easily the point where you should be taking something off the table. You don't have to. If you're looking at a DCA and position size and you're building a portfolio for the long run, which in Bitcoin is technically over 10 years that you should be chasing after for a long-term portfolio, yeah, 10 years. You shouldn't even be phased by this. Okay? Sure, of course, it's going to come back to a certain point to where these averages are, but here's the deal. You're going to be extremely lucky if it ever gets back below this 666 when it does something like this. You'll be extremely lucky, all right? There is not that much chances of it happening anymore. And here's the thing. Even if you did take it right here, which was the high back in 2013, even if you did take it right here at these highs and you were to time it perfectly, like what I'm telling you about with the 666 matching up with breaking out previous highs, and you caught it right here at this level, let's just say you caught it at the about 80 to 90%, 95% of the high. Let's say you caught it right here. You did not have a chance to get back into the position below the 666. You didn't. Not until over here in 2014. Of course, not until then. And here's the thing. This is on hindsight. Did you know all this was going to happen? Did you know if it ever was going to come below 666? Yeah, of course it does. Everything does. At some point it does. But here's your deal. You got here. The only best chance you got in to get here again was about 50% of the entire parabolic move. This entire move, all the way back, right? It's about almost 50%, right? So if you go from the low to the high, right? This is about halfway, right? See that? From this range to this range, it's about halfway. You got a good chance to catch it. And here's the deal. How do you catch the low of the bottoms? It's the same goddamn deal. It's just backwards. Okay? It's just inverse of that. So what do I mean by inverse? If you sold it here, I'll cover the inverse part. Let me finish this off first. If you sold it up here and you're looking to get back in, you never got a chance to get back in below the 666. You're screwed. And this is why I'm saying that this is distribution. But distribution doesn't mean you sell at all. Distribution means you should take something off the table. All right? That percentage is really based on how much you're, I'm not going to tell you how much you need to take off. If it was me, if I was to go back and review this, actually ride this out, like what we're probably going to see in Bitcoin in this cycle, if I was the one that was deciding this, and it was back in 2013, I know that there was a halving that just happened in 2012, right? And you see, it's different to go back based on what you know now, right? But if I was to actually be the one to go back without knowing anything about the cycles, but just using the strategy, right? That's the deal, right? We want to find out if this strategy really works. Take your profit, take it all, right here, because I guaranteed you, you're not going to get back in a position here, but you will be able to get back in at least lower than what you bought. That is already winning probably about 60 to 70% of most people who are trying to trade already. All right, majority of the time they buy higher than they buy higher than where they sold it. All right, like they sell it here, and then they get back in up here, all right, at a confirmation, like bouncing off of this 666. Yeah, sure, that's safe, but you're not profitable. Profitable is when you buy high and you sell low, all right? But at least you catch the range. But you had to wait a significantly long period of time if you did do that. You see what I'm saying? Which was 800 days. 800 days or so, right? Not exactly. That's more of it's more 600 days. So that's about 2 years, right? Almost 2 years. That was like from April 13th to, yeah, that's about two almost 2 years. So that's till January 5th, to 2015, April 2023 till January 2015. And so that's what you got to deal with if you take your profit here. Sure, look at this. If you did catch below the 666, okay, and you measure it up, you're already up 1,000, almost 1,600%. Is it going to hurt you? You know, is it going to really hurt you if you miss it? Yeah, of course you're going to miss this. All right, you're going to miss that, and that's why you let this ride and you take a portion off of this. All right, and here's the thing: you let this ride, even if it came back down below it. All right, you already took something off the table. That's why you take something off the table is fine. It's a 1,600%, you know, move already that you caught. You might as well take something off the table. You're a trader if you're swing trading it. Swinging back down, obviously, what do you catch or what are you supposed to enter again if it swings back down? Down like this. Come on, it's not hard. It's swing trading means you got to take the move. If it's coming back down, you're going to catch the exact bottom. You don't have to catch the exact bottom. You just got to catch it when you're in a profit on the way down. Okay? Back in the day, 2013, I don't think shorting was available in the U.S. All right, leverage trading. I mean, at least on Bitcoin. I'm not sure. I wasn't around 2013. All right, I was around 2015, 2016. But ultimately, if you were to use this strategy, you wouldn't be buying if it's not below this. But if you're on a shorter time frame, you could trade this. But if I was to use the daily time frame here, if I was to try to get in, it would be very hard for me to be getting in, and I would have missed the entire move. This is why this strategy really goes for more of a DCA to enter, right? But as a swing trader, you could probably go off of a shorter time frame. I'm not going to go into the shorter time frame. We want to stick to the daily. All right, but enough of this. So the next move here is if I was to do this, to get back in, obviously what I would do is I would measure. Okay, my measure move would be if not even the Fibonacci retracements. I would do Fibonacci retracements. All right, and I'll show you the Fibonacci retracements for that over here because as of right now, any sort of move as for me, if I was to get into here, any sort of move that is anywhere from halfway point of the way it came up, okay? Let I say I took my profit up here. Am I thinking it's gonna go up or down? I don't care. I just know that I caught the move, 1,600% or even 800%, whatever you entered here. As long as you're in the green, take the goddamn win. All right, you won. Take it. What is the best move? Halfway back. It's a big ass swing up. If it's gonna swing up this quick, it's gonna swing down fast too. Come on. Does it mean you got to buy below the range? No. Did I know this is gonna be the entire range? If I was to not look at this point going forward, I just know that I'm looking at this entire move up. I'm only gonna measure. I'm not gonna measure from all the way down here. I'm looking at it from the point where it picked up the most momentum. All right, where the candles started going engulfing candles. All right, so I'm looking at something like this right here. This is why I'm saying that this is where I'm starting. The breakout was pretty much right here from this smaller point, and it broke out, but it doesn't count because this was nothing but chop. I want to find the engulfing candles like right here where it started. So if I was to measure a halfway point, I would go something like this right here, all the way down to this to engulfing point right here. And this is why I'm saying this is about the halfway point I'm looking at. All right, so to be safe right here, and look at how the confluence is up, down, and it's going to be halfway. Okay, a typical move of an N formation continuation pattern, right? In any sort of classical continuation move would be similar to what I'm talking about here, like N formation continuation. All right, forget about the noise. It's the structure of the up, down, and continuation. That is what I'm looking for here. But where is all that at? When it comes down to it, it comes down to this. Wherever it started with engulfing down to these points, it's halfway point. I'm catching halfway the M. It doesn't matter if I'm catching the lows or not. What matters is I'm getting back in position, because if it doesn't go back below this 666, which it doesn't look like it, especially when you get divergences, when you do get these divergences like this and everything's going parabolic, it's a typical bull market move. Okay, the bull market move is continuations like that. Okay, and this is what you would expect for it not to do, go below the 666. I'm expecting it not to, which means that I'm confident it's not going to. Am I 100% certain it's not going to? No, but I'm betting on my case of my strategy working out. Okay, there's a difference there. And the strategy says distribute when it gets above. So start distributing by selling these highs, and you can get back in at certain of these ranges. Why am I saying that? Because there's always going to be somebody that's buying these highs. If there's always somebody that's buying these highs, you can get back in. You can be one of them, but at least then you can reposition yourself back inside of these trades, inside of your investment, and you can ride the moving average. But here's the other thing: can you figure out if this was the anywhere on these top? You could. Here's the opposite of it. Look, if it's coming back, it's going to come back close to these moving averages. All right, when it comes back, it's going to come back close to them. And here's how you know if it's close to the moving average where the bottom's nearly at. Look, you don't have to use the 33.3 like I'm saying, but if you're just going off of the 666, I'm riding it up. Like I said before, I'm riding it up right here. I'm riding this up. I'm riding this up. Now it's broken out of this previous high. Okay, we're zooming in. Now it's broken out of this previous high. Now that it's broken out of that previous high, I'm riding this up with this line, checking out the level of price that it's going up. The moving average just needs to keep climbing, right? It keeps riding this up. But while it's riding this up, it's also playing out the bounces that is similar to these levels down here. Look at this. If you pay attention to this level right here, where I got my target at, there is a wick that came straight down. We can zoom in a bit more. Okay, like right here. And I'll mark this level too. This level right here is a significance reaction in terms of price action that you're going to see. Why am I saying that? Watch this drop right here, right when the moving average got up to it. Look how it reacted the same way. This is why you see fractals in charts. All right, it's not exactly why, but this is my theory on it. Why I'm saying that this is why you see fractals in charts. It's only what I see. You can have your own reason for it. I'm not here to debate. All right, and so the continuation of it is obviously continuing from this continuation pattern over here, similar to it. And like I said again, this is all hindsight, but it doesn't matter. Backtesting this strategy, it's been turning out exactly what I want it to be. And just watch. You want to keep riding it up and putting it at every single support if you really want. You can mark these lines at every single support, like this, and you follow what these lines do. Just watch what they end up doing. Okay, they end up retracing up to these points, and they end up doing something significant and even resembling it. Okay, so if you want to trade, if you want to not just trade it, but if you want to react to the price action like it and even have more confidence in it, yes, I have confidence when you have this much momentum. All right, when you have this much momentum, I have confidence. It's not that I'm like what, uh, I know exactly what's going to happen. No, it's the fact that I have believe that there's this much momentum in the bullish market that it's not that it's dangerous to go against it, right? So here you go. It's this bounce that you see on each one of these levels. Now let's zoom in on these bounces and let's put these lines up and let's see where we land. All right. So the vertical lines on these dates. It's going to go off of 666. All right. And so we will put these vertical lines to see what the price action was doing once we go up there, once we get there. Okay. So let's go back up. Let's zoom out. Okay. So each one of those were supports. Remember? Support. Okay. This was the end. We'll go look at this line in a bit. All right, so let's change this color to white so we can remember that. And here you go. There's another level here that was close to, you can say the support is about 2 days away from the support, okay, from this bounce. But even then, it was still in the middle of the move. It still had more continuation to go up. All right. So what I'm saying is now that we know that, let's zoom in a bit more and let's backtrack and trace these lines over to see where each support was. All right. So this line right here was over there was support, and it did continue. This was the first one. It went higher. So let's get rid of this one now. We're good. That had a confluence, so it worked, right? Another white one. The white one was a top. All right, was a stopping volume candle, spinning top candle, whatever you want to call it at the top, right? And just look at the price action when this was happening. All right, where was it at? Right here. So I measured this white vertical line to this horizontal one, and it was right here. All right, so this was support, and up there was a top. But if you pay attention to how much of the price action was actually happening, not just there, here, here, and here, it also signals an area of huge volume, all right, that also led the price action to top out, all right. A bottom right here of the huge bounces of support. You saw it happen 3 times, which means that up above probably gives you a huge probability of it being a top. I'm not saying it's going to be like that all the time. What I'm saying is that that's where you should expect to be price reactions according to what the average is at this point. Look, the average is now like the average is entering this territory that's like this. Okay, so if I was to do something like this, and I was to go to the candle bodies only, not the rain, not the wicks, just the candle bodies, all right? And let's go with just the candle bodies that are like currently in the side of this range right here, all right? I don't want to count this blow off top. I'm just going to count the range of the previous high of this one and this one, all right? So like a cup and handle formation here. This is previous resistances, right? So I'm just going to go off of this one right now. It's not my bias or to make it easy at all. This is just how I backtrack, all right? And when I see this moving average start entering this range, you better expect there to be the same kind of volatility that you saw over here. Not the same, but you would expect to be entering an area of range up above. All right. Once you enter the range over here, you can even do a box like me too, like this. You don't have to do lines. But this is only if you're looking into analyzing. And trust me, you don't really want to do this if you don't want to be stuck at the charts forever. This will take time. And you won't really know what you're looking at. All right, so this is more for seasoned, individuals who understand what ranges will be like and whatever the case is, right? If you've been here for some time, then you probably understand it. But if you don't know it, don't even chase after this box. All right, just chase after the supports and add your levels for your notifications so you can enjoy life. All right, don't be stuck at it. So here you go, rising up when this broke, when the moving average breaks into it. This is what we will see. Yeah, it's kind of hard to see, but I gotta turn these off. Okay, get rid of some of this noise. Okay. All right, so right here is where I enter the box. Pay attention. Right there. Okay. 666 enters the box. Starts to top out. Where's your range? Right when it entered the box, your range is sitting right here. Okay. I would start looking at you already got price action over here. Okay. I would start looking for the ranges of the lows. And since we're only looking at the white line, I'm not looking at what is above here. Okay. I would look at right at the point to where my candle is at. I'm not looking at the point where I don't see any of this yet. I only see the white line. All right. So what I'm looking for is this. I'm going to go right up to the top of where I'm at right here. All right. If not, I'll even go right to the wick of this previous move and act like this is an area that's going to be a high. All right. Why am I saying that? Because it helps put me into an area where I'm saying this is the highest point of distribution because I've entered distribution on my average. My average is way higher than what it used to be in the past. All right. When the average is way higher in the past, then this means that your premium prices are extremely out overpriced like this. And to bring averages up, come on, candles need to like go exponential like this just to drag big moving averages like this higher. Okay, these averages. And it's best to know that when it does get into the box, like I'm saying, it's entering an area of distribution. Okay, take that into your notes. Write those down. Remember that. If you're in an area of distribution, I would not expect something like this. Distribution doesn't end up like this right away. Distribution takes time to play out. All right. This just means that you're in an area where now it's distributing, meaning that they're selling into the rally and it's going to need to reaccumulate before it takes off. All right. It doesn't have to be below the 666 like over here. It doesn't have to be. All right. But what you will start to look for at this point would be your typical classic N formation before you take off. All right. And you don't think that it's going to take off right away. You let the chart tell you when. All right. And the information is obviously going to be in a formation to where it's going to go below this 666 before it takes off. No, it did not do it over here. Okay, no, it did not. But this is why I'm saying that you want to take it here and you want to take it here. Now that you call both gains, you were still able to purchase under the 666 later on. Okay, you just don't FOMO in. This will help you from not FOMOing in anywhere here because you thought it was going to bounce, right? Let's just say that you thought it was going to bounce from this point for some freaking reason. Maybe you heard it from someone like me, right? I'm just saying. Look, remember the move is always going to be an N formation before you go, okay? And, oops, let me get this right. N formation before you go. It's N formation, like that. What I mean is, you got the N formation that needs to go like this before you go. Okay? The most simple one, if you're just playing off of patterns, is the typical cup and handle pattern of a rising move and then a cup. Okay? Like a cup and handle pattern like this. This is the typical move. Retrace that, continue. That's a typical move. Some people call this a head and shoulders, right? But this is not even about patterns at all. We don't need to go over patterns at all about any of this stuff because technically it doesn't really matter. The 666 is all you really need. And the 666 just says that you will accumulate below 666. I went over these details here to backtrack like what could be done. And your range is this. Drag it out. Look at the confluence of this range. Because this range, your moving average entered here, and it was riding through this entire distribution pattern. And look at how it distributes as this pattern was traveling through the range down below. Okay? Look how this is just traveling through the range down below. And it was just distributing the entire time. And once it distributes all of it, and here's the thing. Let's get the, since I drew this line, I knew it drew for a reason. Let's put it right at the previous high. I want you to follow this 666 along with me. And look what happens as soon as you break into the all-time highs. And this goes into price discovery of breaking out of this price high over here. Price discovery coming out. 666 going into price discovery. Look at that. Now, this is what I like to do with the 333. Since 333 is a faster moving average, it's important to know this. Look at this. Watch this break out of the all-time high, and it goes into price discovery. What do you think is happening? It comes right to it like a magnet. It comes home. Bitcoin came home to the 333. Don't worry about the bounce. 666 is more important. Broke out. Came home to the average. All right? Everything returns back to its source. Key point, takeaway right here. Returning back to the average. Now that it's back here, look at the volatility that's spiking in between this distribution range and this distribution up above. Look how violent this was. Okay. Look, I'm doing this in real time. Did I purposely know that these were ranges? No. I'm telling you that these are going off of the average. I drew these range based on these averages. Okay. What the average was doing to the price action. When In other words, it's backwards, but I'm going off of the average because it's much easier to go off of the average. But in real time, price action is actually doing something to the average. But for, to make things more simple and more digestible for, someone dumb like me, I'm just talking about this, to just ride the average and let the average give you the price action. All right. So riding this up now, when it returns home, you don't buy it right away. Because look, it came right back to your entry, your profit taking zones up here, right? It came back here. You don't want to buy where you just bought in. You want to buy lower where you no not bought in, but where you took your profit. If we took our profits over here, like this, like let's say this, TP, right? If this was my TP and I took profits over here, then what I'm looking for is to buy lower, of course. And if I took profit right here, I'm looking to start to take profit lower. Look, this sounds so common, but trust me, it's not the easiest thing to do when it comes down to it. Why is it very hard to even talk about this strategy here? Because it's so easy that you're going to ignore it. You're going to think you know better. Okay? I'm telling you this. After 7 years, I've told myself how many times I didn't know that I knew better, and I was wrong every single time. All right. So I'm telling you that this is the easiest way. I'm not just saying it's easy because I'm trying to sell it. I'm trying to tell you that this is something that's the easiest way to do it, because if I was to go back, I would do this all over again. I would do it like this, exactly the way I'm telling you. All right. So the TP, of course, would be in areas that are coming back to your zones of distribution. It's just the opposite of the accumulation. You're not looking to go down below here this far, right? You're not looking to go down into this distribution range again. Just look for and I'm putting TP here because you're going to take profit, whether it's a short or you're taking profit because you're whatever the case is, right? But let's we can rename it, okay? Let's just call it um uh buy, okay? Simple, right? Let's just do that. Okay, so we'll call this the buy zone because you're below the previous high. And I'll tell you why this is important. You'll see it later on too. This isn't just something that's going to happen once. This is the beginning of a bigger fractal. And here you go. You start buying in the zone right here in this area, because this is telling you that you are in an area where you should be looking for buys at this point. DCA in every single drop if you want. Do you have to get it perfect? No. You just got to make sure that you're buying lower than where you were taking your profit. Okay? Do you know it's going to go there? Not at all. You don't know how low it's going to go. But you can count on the price going lower, especially if it's such a big move up. You can count on the price remaining lower for almost as long as it was going up. All right? Like there's a certain, I'm not going to measure it. All right? That's for another video, but that's the case. Okay? So if you see what I'm going for at this point, it makes sense. Okay. Now, this is the other point that I'm getting at. This cross here, I like to call this the scene of the crime. When you get the 333 crossing the 666, that's momentum. Okay? That's momentum right here. And what I mean by momentum is that when you have a cross like this, the important thing to know is that this becomes an area where somebody made a really big decision in terms of a really big move, that when it comes back up to this level, this is exactly where your profile is going to be for trading. And look what happened here. This is a big ass accumulation and distribution tight range right here that flagged out. Okay. like this. It flagged by, what I mean by flag is this, all right? It flagged out, okay? It flagged out like this, and then it broke out and it ran. Technical patterns of a flag pattern breakout is that, all right? It's like, do I need to measure any of this? No, I just need to know where the flag is going to form, and that's right at this cross. You can do this for every other cross, but trust me, you're going to get some wild mixed signals all over the place if you're not using a big moving average like this. I wouldn't even use the 200 or the 100 or the 50 or anything like that. I would stick to the 333 and the 666 crossing if you're looking for a area of interest like this. All right, and not only that, wait till you see what happens when the moving average comes to this area. All right, like I'll delete this because we don't need to talk about candles. I just want you to see what happens when the moving average comes back to this area of interest. Right here, I'll make it red because this is where we broke down and crossed down to a death cross. Came back down, accumulation period below the white. This was even below, 333 came down below. You can say this was a double bottoming formation and it came back up. Now watch. This was almost, when this crossed like this, it's pretty much like the beginning of the end already for this move, all right? For the 333 and 666. You get an expansion after the death cross because you need an expansion, just like how it expands like this. Up, down, up. Classic N formation move, right? Classic. I say classic because it happens all the time. You need to have this happen at this point. It's almost a necessity or a requirement at this point. I don't know why. I just know that that's what the charts tell me. You don't need to know why either. I don't think you need to know why about that case because that's something that maybe you'll find out on your own as as you continue your journey. I haven't figured it out, and probably because I don't really care. All right, and so when you get this moving average that comes back into the red, this is where all the magic happens. As you can see, it comes back into the red. It becomes an area that's really interesting because watch what happens at this point where you reach the red cross. Even right here, even this cross down here. Once you get the golden cross right back up here, you have exponential candle price action. Okay, once you get that happening. Of course, the 333 crosses above. But you need, like I said before, you need exponential moves to move these bigger averages. All right? You need bigger exponential moves. Look at how the exponential moves had to drag down to bring the 333 down below. You need exponential moves. That's why it's important when this crosses, you need an exponential move that follows to give you a move up. Some people can call this confirmation. Some people call it whatever. It's better to just know that these moving averages are required to have big moves to move it. That's it. In my mind, that's easier to think about. All right. So, and look, the trend continues. You trend is your friend until the end, right? Came back down. Did you need to take any profit here? No. Remember, this is distribution, but it doesn't mean you have to sell it. Why? Because we know the information continues. I didn't say tops out. I said continues. It's still inside distribution range. What does that mean? Distribution means they're going to keep selling it into this range. But what is that? What happens when there's so many sellers out there? That means there needs to be buyers. That means that there's buyers for every seller. And when there's so many sellers and distributing at this point, it's going to rise up higher, especially if you got both of these moving averages that are pointing up and you are now exiting. Watch this. You're now exiting this. Let's get rid of this one now. You're now entering this point, which is now meeting resistance up here, previous resistance. In fact, you're already above the middle range of the distribution range that we drew way back here. Okay, don't ever change this. If you drew it like what I'm drawing here, you don't ever change it. You don't ever do something like this. Oh, it's up here. No, you leave it exactly where we had it. Okay, now I fucked it up. I don't remember where it was, but I need to go back and undo it. Okay, but yeah, right there. So that's what I'm saying. Don't even worry about this being perfect. The moving averages are perfect. All right, not these, not your drawings. Okay, your drawings aren't dynamic. You need dynamic um, like indicators, and these are dynamic. Okay, so once it watch what happens once it enters the goddamn range. Look at that exponential move. Okay, and it tops out right when you get in there, and it comes back into the range again. You see, this is exactly what I'm talking about that. If you look at how it came up, it was also copying, mirroring this exponential move here too. How it came back up and it just kept chopping like this, like an N formation like that, and just watching how it came up like that, and it was doing up down like that, chopping its way up. This is how I'm running things in my mind. You're not going to do it exactly the way I am. If you do, so be it. But if you don't, that's fine. Please find your own way to do it. It's not to be exactly the same way I'm doing it. But I'm telling you that this is the price action that I'm seeing. I'm absorbing data that's in front of me. I'm not making this up, right? So as I can see that from the left, it's also reacting the same kind of fractals that these are along the way too. It's rising the same way and it's chopping the same way as it was coming back up. You don't have to look at it from that point, just or to the left the same way I'm telling you. That's more of a deeper dive into it too. The same way. I tend to overshare a lot. All right, so you probably noticed that, but either way, just try to follow me here with this 666 moving up like this. And as soon as you enter this range of distribution up here that we had, remember where you took your profit, it was over here, right? If it was over here, it's near the top of the range, you're already back to where you were in profit up above. If we were to measure where you are at this low, let's say that you DCA'd and you bought in not at the lows like down here, but you bought in right here, okay? And you came back up to the area where you bought. You're already up 240% on your move up. Just this is nothing but following one line. Any sort of details I gave you about these crosses and these lines and all these ranges, it doesn't matter. This is why I'm telling you about this 666 is all you really need. Okay? But to if you ride this along the way up, you can see on how it's just repeating the same kind of fractal to the left, but you don't have to look exactly. So here's the deal. Now that we reach the middle point, watch. We reach the middle point of this distribution pattern. There's price reactions that happen in the middle of this distribution pattern. Let's put a vertical line right here. Ready to see the magic? Amazing, isn't it? Right to the top of this move. Retrace back down. All right. Why? Price action tends to play out in the same way, like I said, historically, based on levels of reaction. Are the patterns the same? Were they the same? Let's look. Up, curving down, or up, fade, up, fade, up, fade. It's a straight up. It can be like it'll look like this. One, like that. Basically, sort of like an Adam and Eve, right? Or an inverse cup and handle, right? Similar like that, or like, just typical. The easy way that I look at it, it's like an H, right? Or H pattern, right? Like that. And ultimately, it is going to be something similar to that. And did I know this, where this was at? I didn't look. Okay, I did not look. I was so zoomed in like this, and I even told you that we're right here. Let's draw a vertical line. Where are we at? And where was that at? Exactly the entire range of the highs. Did you catch the exact top? No. Just like over here, you didn't catch the exact top. You caught almost to the point, and it pushed one more time to the a little bit higher. But does that even matter? No. Hell to the no. That's a huge ass move already at this point. So what do you do now? What do you do again? Range. Why? Because you're at the middle of the distribution now for the 666. It's still going to continue, but what does it continue? When it passes this halfway point, gravitates towards the 666, right? It's going to dump. It's going to come directly towards it, okay? And so it's a correction. So we'll figure out how low this can go shortly. But let's go over this. So now that we got that out of the way, let's get rid of this line. I already showed you what can happen. And I need to do the range. So look at this range. We were right here, right? Let's see where that was at. That was like, shit, I even lost it. Okay, yeah, I guess, yeah, we can put it right here. So we were right here. to the from this high to the low of this support of the wick. All right. And look, you have your range. Doesn't matter if you broke below or not. You closed above inside the range. All right. Does it matter about this high over here? No, because look, all that matters is you even caught the close of these, and these are nothing but wicks that faked out to the upside. Doesn't matter if this one closed above it or not. It's not perfection. It's range. Keep that in mind. The definitions, make those clear. Okay. I like to cover the, who, what, why, how, when, right? If I'm covering all that stuff, I'm telling you that your identity here to identify these, to learn how to identify these, is all about not perfecting it, but recalibrating it along the way. All right. This is what range means, that you're not going to find the entire exact level. You're going to catch the range where it will stop. All right. And that's exactly what I'm telling you. The 666 is telling you when to stop and draw a range. Now you got a range. And look, it takes multiple days for this to play out. You'll have fun. You come back. Oh my God, I made a lot of money just by sitting around. There you go. That's exactly how it is. Do you have to leverage? No. You can do this on spot. Okay. But it's just, can you do this with meme coins? I wouldn't recommend it. All right. I wouldn't recommend it because most meme coins don't even have a 666 moving average. They last about what, 10 hours at the longest. Like meme coins and Solana, they only last like 10 hours or even sometimes 1 hour. And it's like up 150,000% or something like that. I don't know. Whatever the case is, it's all messed up. Don't even deal with meme coins. All right. If you do, then you probably know something that I don't, and you should be doing a video on that. All right. So yeah, this is your range. And you see, I'm not even going to tell you about what patterns this is. I'm not going to say anything. I'm telling you about the moving average. It's going to find its way back. Here's the deal. Do you take profit right here? I would. Okay. So I'm going to put TP. Okay. I'm going to put TP right here where my moving average hit the halfway point, like right here, of this previous distribution. Now it's time for me to distribute. There you go. I distribute right here at this high. I don't care if it went higher. Okay. I distribute by taking some profit off the table. Same amount of profit I did over there. That's fine. It doesn't matter. My bottom line has been going up because I bought low and it's back even higher. Okay. So let's have some fun here. Let's measure this out too, just for fun. So if that was the case, then if I bought down here and I rolled that up, right? Did I have to take profit here? No. Remember, because we are not broken out yet of this entire pattern. Okay. Look, if you don't know anything about patterns, do you know anything about these ranges? No, you don't, right? If you don't, you don't. Then what do? Just ride it out. Just let it ride out, because as long as it doesn't go below the 666, then you're okay. If you're using the 333, it's even better because then it'll help you with the momentum to tell you if it's going to bounce or not, right? But either way, you don't really need it, okay? You could just let it ride out until whatever. There's a lot of people back in the day, back in 2015, 2016, that just bought it and just forgot about it for a number of years, and they still won. The reason why is because they just held it, and that's what I'm trying to tell you about this strategy here. But at least this can help tell you when to buy, instead of just blindly dollar cost averaging. All right. Of course, if you're stacking for 10 years, can you still keep buying above the 666? Yeah, you can. It's still cheap. You buy it along the way. It's still going to make sense because you're building a portfolio for long-term investments. In fact, you're building a bag, right? You're building a huge stack of supply of Bitcoin. You're not looking to trade it. You want more Bitcoins. That means you want to keep buying as much as possible. Then you want to go off of the average price, which means this. If you're looking to be DCAing for the long term and you're not looking to sell a single coin, okay, then that means that you would buy and you would hope that this 666 holds for the longest time it can hold for, period. All right. But if you're trading like this, you can, of course, accumulate it on the way up. It's the same deal, right? But it's more impressive when you can trade it. Not just impressive, but more compounding effect. Okay. So now that you got that out of the way, the 666 climbs through this. It's like I'm just telling you a story of just following the damn story of this 666. All right. And it's leading you to the water in this crazy desert that's full of like predators that are trying to kill you. Okay, it's like it's that simple. And here, I know it sounds really like basic, but that's how simple you can make it. You should keep things simple. Okay, over 7 years now, if I make things harder, I don't think anybody would enjoy it. I've never seen anybody do anything in a career to where things got harder. Okay, mastery comes with simplicity. All right, it just breeds that. It breeds that. Okay, it's simple. So to keep it simple, going right back to where we were, TP, telling you the story now. We TP'd, letting this ride up now. I would let this ride up until it breaks out. And watch. The moment it broke out, how ironic is that? It just so happens to be right where you broke out to, leaving distribution. This is no joke. Look at this. All right. Do I measure time? Do I know anything about this pattern? Was there a Fibonacci that I've measured? No. Of course not. I'm not using any sort of special stuff. It's just a 666. Watch. Now this goes up. Okay. Well, now that breaks out like that. What is that pattern that's above that I should expect it to do? Right here. If I look to the left. This is only if you care to do it. You can walk away from this point and let it do its thing because it's not coming to the 666 anytime soon. So you don't need to worry. But if you're a crazy person like me and you're trying to play witch doctor here to follow all this shit and watch it play out with the fractal, right here. Right here, baby. 1, 2, 3 wave. You got this entire 1, 2, 3 wave top formation here that it's just riding up, averaging in this price action to the left in a bigger fractal version of it. Guess what? It did retrace. It did retrace back to the top of the distribution range. It retraced back to the top of the distribution range, flipping previous resistance to support before taking off, flipping previous resistance to support before taking off. It's technicals. These are technicals. Do you need to know any of this stuff? No, you don't. You don't need to know any of it. 666 would have taken you there anyways. But I'm telling you this because it's to tell you that the story is working out the way that I'm telling you. All right. And as you can see, because I've read this story plenty of times. All right. I'm not narrating the price action. I'm following the average. Okay. And so here we are with this move that's climbing up again because we want to keep this climbing like how this climbed up and it's chopping. All right. So when it's chopping like this. It's chopping. Red, green, red, green, red, green, red, green, like this. I'm not looking for this to actually go up continuously straight line. I'm looking for it to mimic the same kind of price action to the left. Doesn't have to be perfect, but it's going to be damn near close to it. All right. So what I'm going to be chasing after now would be this move right here of the 666 coming up into, you see how I'm just repeating it back into this range of the distribution. Here we go again. Let's see what happens. Again, I didn't ever scroll up. Like I said, I never scrolled up. I don't remember it. I don't memorize it. I don't even know what the top is for most of this shit. All right. Here we go. That looks right, right? Let's zoom in a bit more, just to be more precise, right? I like precise. Not perfection, but precise. Like a surgeon. All right. Right there. The range. Even better, let's just drag it over. There you go. That's more precise. See, I don't even know half of this shit. And I'm just telling a story still. See, where are we at? Oh wow, look at that. We caught the breakout right there, or broke out. So what do we do now? So was that perfect? I probably didn't draw it perfectly timed, right? But let's go with what we have. Exactly what we have right there. Maybe this range was probably draw slightly off, but does it matter? No, because how high was this move? All the way up to this point. So let's go off of what I drew, right? Because we're talking about no perfections. We're not going to draw the range up here. We're going to draw the range right here then. Okay? So we'll draw the range right here. I'm going to say that, okay, this is where it topped out. All right? I'm going to say this is where it topped. I'm not going to even know any of this stuff because the white line is where I'm at right now with my field of vision. I'm going to go off of it like that. So that's exactly where it's at. We're just not let myself see anything, okay? Okay, now it's time to start to distribute, right? just like we did before. Distribute time. So now that we're distributing because we reached this point in the resistance and we entered the distribution range. So what do? Start distributing. So take a little bit off. TP. Okay? I TP'd right here. Let's extend this range further out. Okay, so I TP'd right here. Let's go exactly to where I'm at. It wasn't that low. Oops. It's actually up here. Okay, right here. So I TP right there, right? So we'll put it right here. So I TP right there, and it continued up, who knows, what, 14,000, so it went up another $5,000. Big deal, all right? Caught the range of it. If you wanted to take some up here again, go for it because you already above your range. You already drew your range. You already got your range. Was this accurate? Did you know at that time? No, but you had a system. You had a setup that you should follow. And if you followed it, look what happened. Okay? Here's the deal. You're not going to know. And that's the reason why you're probably not going to do anything about it. That's probably why you're going to come up with all these other ideas why you're going to be right and why these are wrong. Like I said, every single time I tried to do something like that, I lost my trade. I've lost positions. I've hurt myself big time. And I'm telling you, follow the goddamn rules and you'll survive. It's really that simple. It's not about trying to predict anything. Okay? It's all about setting up the move for the preparing for it. All right? So here's the thing. Was I right here? No, but I can still scalp out a little bit more profit as it goes up outside of this, on top of this range. You have something to work with now, a framework. That gives you so much more advantage. Okay, you see how I'm just continuously dragging these further because the moves get more and more bigger? All right. Did I make this up here, this TP? Did I make this up? Did I draw this range perfectly? Yes. I'm telling you, the video is proof. How I drag this over, and look at that. This was the top of 2019. How ironic was that? Okay. Look, Fibonacci retracement could probably be up here. Of course, this could be a 0.618. But do I need to draw that shit? No. Half of this shit is confusing as hell. Why should I even care about that as a brand new person? You don't. Why? One thing only. Keep things simple. 666. Okay? 666. I don't even care about 3-3. 3-3 is only mainly for this and the divergences. Okay? But you could turn it off. It gives you less noise. All right? So to continue on with this, same deal that we do here. You wait until this gets out of it and you let it find its way back to the average through the correction. Anybody could trade if they can. If you don't know how to trade any of this stuff, don't even touch it. But at this point, what would the bias be as a trader? My bias will be correction, bear market structure, heading down. Lower highs, lower highs, lower highs. That's how I would short the hell out of this market if I was to do it going back in the day to go back in time. But we don't talk about that shit. We're talking about what's real, okay? And what's real here is that it's going up. So the moving average is going up and it's catching up. In hindsight, look how far it's come. The average price of a 666 moving average. Look how far it's come. Why is that important? Because the average price is more like the true price. Every swing up and down is a decision in a fight, in a tug of war to bring a price to a certain fair value in the marketplace. And while that fight's going on, what's really happening here is a real average price is being determined. Not by you, not by me, not by a market maker, by one thing only, the default of the inflation, how it works, how things are inflated. This is why you don't see bananas at 22 cents or 29 cents anymore. All right? You don't see that. Okay? You don't see it like back in the days anymore where things were extremely cheap. And it's not about being back in the day. It's not about money printing or supply or anything like that. Just know that this is how the inflation gets averaged in. It's a phantom expense. It's phantom like fees, phantom like slippage. You got to understand how this comes in. Do you need to know the math? No, it's already included in the 666. That's why I'm saying 666 is the best. All right, and it just happens to roll off your tongue easy too. Okay, so here you go. Fast forward now. This is going on forever, but I got to make this quick. Now, same deal. Now that you've broken out of it, it's going to continue to keep trying to trend up. But watch, like how everything that happens in any sort of trading environment, in trading patterns, it always comes in threes. It sounds like a prophecy, but it's true. In threes, actually threes and fours, okay? Where what I mean by threes and fours is waves. All right? So maybe I can make this into a smaller uh nah, I don't need to. I'll just draw it out. The reason why I say I'll draw it out is because it'll make more sense. Okay. And I'm saying this because it's repeating the same fractals because it's just continuing with the same story that's been continuing on ever since the beginning. And what I mean by that is wave patterns like this. One wave, retrace, end patterns, right? Two, three, okay, four, all right? And the fourth wave tends to be the highest one, okay? Ignore me if I'm not drawing it precisely. I'm telling you that these waves are happening in waves of four. This is why you don't have to count these waves. You can, if you get good at it, I'll give you a hand for it because, these waves will help you like fine tune your positioning once you understand why there's waves like this. And these waves just happen to be waves that came up and waves that come down. There's nothing special to it. All right. But you got one wave down, two wave down. Just look at the lows. One, two, three, four. Okay. Why am I saying four? Watch. I said four because this is exactly where you find a floor. One, two, three, four. One, two, three, floor. Okay. One, two, three, floor. And it floored out here, basically the bottom. Does it mean that your range is wrong? No. Stick with it. Don't do this to it. Oh, it's actually here. Don't do that to it. You're going to start inviting bad habits of readjusting, which leads you to what? One thing, breaking your rules. It will eventually leave the door open for you to allow yourself and negotiate with yourself and reason with yourself to break your rules. Once you break your rules, you'll be in trouble. Because once you break your rules, it's like breaking somebody's promise. And when you break that promise, what do you think happens to that trust? All right, that's what I'm saying. Once you trust this, you don't break it. Don't cheat on it. Don't do nothing. You work with it. Trust it. Let it do its thing. Sometimes it's not going to look like it's going to go anywhere, but you trust it and you're not putting yourself into a really bad position. Okay, you wouldn't be in a bad position if you follow it. Trust me, you won't be. And it's going, look, okay, now to continue. Enough of that fire, okay? I'm just going to continue with this. So let this continue up. Of course, it broke out. And remember, whenever this broke out before, it continued the same pattern. But what do you think is happening now? Wave 3. Look at back here. 1, 2, 3, 4. What do you think happens in wave 4? Wave 4 is when you get the entire cycle to collapse. Things happen in 4. So you have 4-year halving cycles. And here you go. 1, 2, 3, 4. You got the breaking of the cycle now. Massive correction. $20,000 Bitcoin going all the way down to $3,000. That's normal to me. I'm telling you about this thing going back down. Where? Back below the 666. Finally. Finally, you're back below the 666. But here's the thing. Did it go back below these distribution ranges down below? 1, 2, 3? No. It came back to the third one. Okay? Came back to the third one. Did it go exactly to the distribution range? No. It doesn't have to. As long as it's below this, you're entering in already. You're finding these levels already. So here, how do you know? Look at this. You got the cross. You got the cross right here. This is a good sign of the beginning of the end of the lows. So this is where you start averaging in if you want, or even here. Okay, it doesn't matter. In the long run, it doesn't matter. Okay, doesn't matter at all. Ultimately, if this, and you still want to wait for the expansion to come in. The expansion comes in like this, and it's still gonna fold right back up. You got to get space for this to expand. Give it room. But when you're getting expansion here, What that means is that you are getting capitulation. That's the reason why these average prices going down super fast. Okay, because it's going below the average of this new average floor that's sitting right here. Now you get this average price to come in. You're getting below average prices that are now available. Black Friday, start picking it up, position yourself. Let's do it. So let's go right here. We're not even, I'm just going to randomly choose a spot. It doesn't matter. Okay. And of course, we're just going to buy it at this highest point. Let's just say that. We bought it right here. Okay. Blindly, because let's just say because, oh yeah, because we're back at previous resistance here. So it should be support, right? It should be support. So it should be like, oh yeah, it should be perfect. I'll buy it right here. Boom, it drops down. If you enter here and you say, oh, this strategy doesn't work, you're fucking just get, no. The entire point is you're buying below this point, and it's supposed to be an accumulation point, right? So that's what I want you to know about this and think about it like that, okay? So it doesn't matter. And here's your other range too. Like you see this N formation here, like how we talked about an N formation before over here, okay? I can't remember where it was at, right here, okay? And it just so happens to be that this N formation is actually also right in the area where it's between these, no, underneath the distribution up here and the distribution right here. Okay, you can even call this an area like right here. It just so happens that this N formation right here, like this, of the continuation, is the same deal that we saw down here. Where are we at? Where was it at? Great, I just lost it. This is a bit too much. Going back like this. I don't do this that often. I can't. Okay, here it is, right here. And it just so happens that it's in this area right here, to where it's an N formation here, and this is the same repeated deal with this N formation continuation when the 666 was riding the price down, okay, of writing this N pattern down like that. This wasn't actually the area where this thing was actually coming back to find the floor for these prices to go. And that's why you got this cross right here. Okay. This cross right here was a decision-making point to where they made the decision that this is now the floor. And it just so happens that this becomes the floor area because of the volume profile that's inside of this range right here. Okay. I'll go over something in another video that I like. I love this pattern, this N formation pattern here. I love it so much because it's so profitable. Some of the biggest wins that I've gotten is from this N formations, and I like to, like, here, just hang on with me for a second here. I know it's not part of the video, but I like to call this the Dragon's Eye. This is, I like to call it Dragon's Eye for fun because it's like a dragon. Dragons hoard gold, and it's like an eye. All right, like what I mean, an eye is like this, to where it's like a formation like this, to where it's an eyeball, like that, and then it goes up to this point. Go down here. I need to make this. And if you're still hanging on by watching this, then you're gonna get this and you're gonna love it. All right, because this took a long time for me to spot, for a very long time. And what I mean by the eye of the dragon is this. This is the dragon's eye. It's patterns that go up or down in this angle like this, and you get this really interesting divergence fake out here, where it fakes out to the downside and it fakes out to the upside. But the continuation of it is where you make the most. Okay, is where you make the most. And what I mean by that is this. And this right here is the pupil. Okay, this right here is the pupil, where the eyeball. So you see why it's like a reptile eye. Okay, and it's a dragon's eye. And this is where the most of the profit is made. Is right in the middle of the dragon's eye here. Not to trade this chop, but when you see this forming like that, you can kind of count that if it's curvatures are perfectly like this, then you can count that this might start rolling over and fading. If that starts fading and you're short or long, wherever the position, the direction is going, it's killer for the low or the high. It's like continuation is extreme amount of volume continuously pushing. Okay, but Dragon's Eye does end the pattern, and it does lead to these crosses like this for expansion and ends. Okay, Dragon's Eye are known for the continuation pattern to end up at a blow off top or or a bottom. Okay, like this. This is why you saw it at the bottom. Does it happen on the way up? Of course, it happens everywhere. But you got to be able to spot the bigger ones. All right. So that's what I mean. I'll leave the Dragon's Eye on there just because it looks cool. All right. So going back to the story now. The reason why I brought this up over here, way up here, now that we're in 2017 or 2018 that we bought, was because this pattern here actually showed us the normal halfway of this entire end formation here was where there is a lot of potential areas here for a low to come in. If I was to take this candle body low here, even the wick, if I want to take the wick, but I wouldn't need to take the wick. I could put an entire range like I did earlier on in the video. If you rewind it, you can watch it again and you'll know what I'm talking about. This middle here is exactly where the profile ended up to be for the low. All right. This is what I mean by this end formation that first shows itself ends up to be an area of interest later on. Reason why you don't see it? Because you've forgotten about it already. 2017, 2019, that's a year and a half or so already away. Which do you think you would have remembered it? Of course not. Especially if you're not looking at the charts like a mad scientist like me. You're not going to know. But he set indicators, no, not indicators, notifications to tell you later on in the future, hey, this is important, and leave notes somewhere. Then yeah, you'll be the best, entries and exits perfect just by what you know here. So this is interesting for you to know, okay? And it's true because just like this distribution pattern here, there is a middle point to it. The middle point to it is exactly the area where there's a profile in between. The profile is basically the area where there's a lot of trading that's been happening. In that area of trading that's been happening, of course, there's a lot of positions that have been already entered there. If, let's go a little bit here with rabbit hole, okay? Let's say that there's a really big elite player that comes into this market and they start buying slowly into these ranges because you can only buy a certain amount of Bitcoin or whatever per day, right? And they were already like building positions here. And they took they have a strategy that tells them where the highs are too. And they got all up here, well, they were selling on the way up, and they're now selling on the way down, and they're looking for where to buy in. What do you think they're gonna do? They're not gonna be buying right where they entered. Okay, they're gonna be buying lower than where they entered, or especially if they're averaging up still, the average price if they keep averaging up, their price is going to keep entering lower, lower, lower. So I'm not saying that they entered here. Where I'm not saying they were perfectly entering here. In fact, majority of the elites or even bigger players, they're not perfect. They enter here, and they even enter up here. Okay? You have to believe this. It's true. None of them are perfect. All right? And so what I'm trying to say is this is why you have these kind of price action. Okay? And this is why it ends up back at these profiles down below. Because the ones that are really in these areas here, they haven't sold. Okay? They haven't sold up there because they're the ones who are just still hodling, right? Holding it. And these are my theories on it. It's not like I know all of it. Okay? And I'm not saying I do know all of it. I'm pointing out the fact that this is what the story's telling me. And every single time I've come back to back to back to back, I'll even get to the real time where we're at. We're already at 2018. So to fast forward it, continue back up. Look at this, back into the profile range again, right? And look at this, same thing. Moving average back into the profile range again, right? Moving average back into the profile range again. Longer though. It took longer. This time it didn't even get back up there. It made it back up into this range. Do you have to take profit up here because it came back to the TP area, right? Of course. You can if you want. I would. I'd take some point off of here, just like how I did it over here. All right? I take profit here and I re-enter it again if I want it, right? Or if you don't have to. All right? But here's the thing. We got our lucky chance to get back in already. Is it wise to take your profit right away? Is it wise? Is it wise to? Okay. See, that's where you're gonna have to really review what's really happening here. And do you really know? Of course not. Okay, you don't know. That's why you can take profit here. I would. Okay, I would take profit. Okay, over here I did. I TP'd here too. And did I go back? I got a range already, so I could still work off of this range for it to continue off of it, right? Like down here. So I TP here, in the same area where I did before. And am I expecting to go higher? Yeah, this is climbing. So do I expect it to just keep climbing back up? I expect to get back in at this profile range, at the low. All right, that's what I would do. So I get back in at this point. Watch. I would buy back in at this point. Oops, that's the wrong one. So I'd buy back in at this point. Just like down here, I bought, right? I bought back in at this point, at this profile range. Buy. Okay? This is what happens when you do that. Watch. So I buy back in, and then now my position is up here. Not selling all of it. I'm saying buying back in with a certain portion, because you're only taking a certain portion off the table. All right? And then now you're buying back in for a certain portion. Here, you can buy back in with your certain portion that you did the same thing. Okay? But to come back down here and break through, that led to a black swan that was right here. Okay? This right here is that. Okay? This right here, we'll call it the 19. Okay? When when the C19 happened, it was March 20th, 2020. Okay? So that actually kicked in right here. And I'll tell you why I don't care about the damn news right now, because of this. Because of how perfectly it just laid out the same kind of shit that it always does. It did nothing but come back up, just like how it did here, came back down to flip things to support and continue. Okay? And this right here, when it broke out, came back down, support, continue. Came back down. Did you get an entry point again down here? Yeah, you could have waited to buy, do the same thing. Are you below the 666? Yes. So guess what? What do? Buy again. Okay? Buy again. Were you perfectly going to time this? Do we have an area of interest right here that we know? Right? Did you have it? You want to know? Watch. Remember what I said about the cross. This is only reason why you use a 333. Support. Up, back into the profile range, sold off, comes down here. Your buy signal is anywhere from this line or below, if it does go down below. Why do you think this is going to continue to go up? No, not just continue to go down. Fractals, fractals, fractals. Bounce, 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 bounce. Expect it to repeat. 666, holding sideways. If this was actually pointing down like this, I'd be concerned. All right? But this is telling me the entire story of rounding up, continue. And guess what? Guess what happened right here? Remember what I said about moving averages that come together real tight like that? Divergence. I, back in 2020 here, there was a lot of fighting going on about this is not going to make it and we're going to dump. The divergence played out and it continued to go higher. All right? Doesn't matter who's right or wrong. What matters the most, 666 still did its thing. All right? You're not going to be fighting with anybody if you just keep your eyes on this and let it do its thing. All right? And buy whenever you're being told to buy. Like right here. You got right here in the zone of the cross. You got another cross right here too. That when you got the golden cross of this. The golden cross of this is already giving you your entire range. Look at this entire profile range right here of how much trading was going on here. That this is exactly the floor of where value is down here. Because it's below all the volume that was trading before. Okay? That's just how I'm breaking this down. It's not that it's going to be exactly the way that you need to look at it. Trust me. C19 was right here, like March 20th or so. It was to break down exactly what this red candle that went straight down. What was happening here? It just needs to expand. right here. It just needs to expand. And of course, if this happened here, even better. You get to catch your range again one more time. If you're not in a loss right now at all, period. You're in an area of accumulation. Okay? This is what accumulation looks like. And you're right here. Just so happen to get one more chance of accumulation. And here we go. Going forward now. Watch. Going right into this area of getting back inside of this range. Climbing up, climbing up, climbing up. Look at the price action just go as soon as it broke this freaking golden cross again, just like it did in 2016, 2015. Same shit again. 666 breaks above it and it goes, it gets above this range right here, and just watch on how it just climbs parabolically as soon as it hits that break. Why? Because if it's going to diverge 333 and the 666, it needs to have a what? A gigantic candle to the upside to diverge these moving averages. Boom, boom, to bring these up. Now what's going to happen now that these move now that the 666 is entering into this range, right? Remember what I said about this range right here, okay? So here's the thing. This is where we're going to find how accurate we were with this uh range that we drew back in 2017. Right here, right? I said right when it penetrates that box. All right? Penetrate this box. And now you're inside the range. What's happening now? Oh, what do you know? Continuation of it. It didn't dump this time, but it did over here. So what does that mean? What that technically means is that our range wasn't totally drawn out perfectly, right? I didn't select the lower range, okay? So you can actually go back and actually correct it now by going like this, right? By going like this to the lows, because I was having, you would have to have a decision to decide whether it's going to be this candle right here or this wick that was going to be, I mean, this second wick here, or you were going to consider it to be wave three that was going to be right here. That's the low. Okay. But it wouldn't make any sense. Okay. It wouldn't make any sense. So this is where you can debate and you can actually, challenge yourself on trying to problem solve this problem. But I'm not going to go over that because look, still made money, right? Still won. Doesn't matter. You don't need to be right, okay, all the time. You just got to be uh, positioned correctly based on the 666. Okay, so here's the thing. Did you catch this mover here? No, you don't have to. It's better if you didn't. All right, it's better if you didn't. So as soon as you got to this point, of course, it broke even higher. Okay, it triggered up even higher, and you're writing it up now. And let's say that let's keep writing this up, and where are we at now? 666, writing it up now. So you're about almost halfway through this range, and it starts to distribute already. All right. So that tells me that this range wasn't completely drawn out correct, like I said before, which is why it's kind of off. Like I don't remember seeing a lot of this range like this. It's been a long time since I back test a lot of this, but to see how I'm doing these mistakes in real time like this is obviously the point I'm going for. Okay, and so of course you get to the to the middle point of this range, and we're going to draw the middle point because if it pumped on this middle point here, no, if it pumped into the range, then I would expect it to dump, okay, in the middle point, and it didn't. So we continued up, and at this point, what are we looking at this as then? Something's changed here in terms of its range distribution. So now that we're up above here, let's go even further. Let's look. Okay, so that's one wave, which is entering, two wave, which is the middle, three wave, which is at the top. So now that it's broken out, are we above previous highs now for the moving average? Oh yeah, we are now. Okay, we are above moving average we are above the previous highs in 2019. So we've broken out of 2019's 14,000 level. Now our next level to get above for the moving average to get above into a premium level is this 20,000 level. Okay, and it's amazing how it's broken out, and now it's going up, and you're ending up in a wave that's going up, one wave, two wave, three wave, four wave. Fourth wave is ended right here. So how do we know if it was going to do it? Remember the breakout pattern? Okay, so this thing broke out and it found the end formation to continue higher, just like down here. Okay, where you broke out, you flip and you continue. Okay, and when we had that, That's showing up this area right here. We had resistance in 2017's 20,000. Now that we are back here again, you got this entire gigantic cup and handle pattern that broke out. 666. When it came up to it, it already dumped into it. So this entire point that I'm getting to is, since we drew this range kind of off, it's best to go off of the middle point, like always. Just go back to the center. When you don't know exactly where it's going to be at, go to the center. All right. And here, in hindsight, did you know it was going to be like this? No, you don't. But once you start getting up into these areas where it's sort of like, oh shit, it's way the hell up here already. I probably should be taking profit the moment it broke out. Yeah, here's the deal. The continuation of this 666, the moment that you broke out of this range, just like down here, what did we do? Let's go back over here. So as soon as this thing came into the top, right, it entered this area here, we started TPing already up here. Do you TP all the way out when you break out? You can. You can TP all wherever the hell you want, right? What I'm pointing to here is that once it gets up here to this zone of this breakout, no, of this break into this pattern, 666 broke in, 666 continued, it kept going up, 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 and this has been distributing the entire time in an angle that's going upwards with 4 waves of movement. It's more important to know that if it keeps going up like that, once you follow your rules, once you enter this point, you could try to take some profit here if you want to still follow your rules, because once it continues up, you take a little bit more profit here again, and you enter into this area, you take a little bit more profit here again. Okay. The reason why it's going to be a bit sloppy here was because your profile range was built based on this TP that we came from down here. Okay. So if you continue the same profile range, does that mean you're losing money? No. Okay. So that's what I'm saying, that it's not going to be perfect. It doesn't have to be. It just needs to be profitable. And you're profitable right here. You're profitable right here. You're profitable right here. Were you diminishing your gains then? Yeah, you could be, because you're taking profits a little bit earlier each time. All right. Does it matter? No, it doesn't matter, because you're still profitable. That's the key. All right. Look, if you want to try to perfect it, if you were doing it from earlier times, you're going to get good already along the way. I'm doing this in one go with a super quick, skimming through it like that. And I don't want to make this video like 4 hours long, right? It doesn't have to be. It's just super simple. You notice I'm just repeating the same crap over and over, right? And so this is important to know why things are doing what they're doing at this point. And here, then how do you draw a profile if you're doing like profit taking multiple times, right? Just take the last profile, the very last one of the breakout here, wherever you see it finding its highest point, right? Like for example, here's the thing: if you got up to this point and it hasn't retraced yet, it's gotten to this highest point and you're still taking a little profit here and you just think it's going to keep going, that's when it's pretty much gone. Wave 1, wave 2, wave 3, wave 4. Just consider wave 4. It's got like a 90% chance that it's going to end at wave 4. It does. If you see a wave 5, you better not get into that one, because that's where it's going to, that's a dragon's eye territory when it goes into wave 5. Wave 5 is something similar to this. In fact, this is almost like a wave 5, but it was not it was almost a dragon's eye, but it's not completely it. So right here, watch. This is almost a dragon's eye right here. This is almost a gigantic version of it, but did it continue? No. Guess what it did? In fact, it did continue, but it went the other way. All right? So that's why I'm saying the dragon's eye doesn't need to play out completely. You don't get a dragon's eye until dragon's eye does something like this. Okay, where it just goes straight up. All right, where dragon's eye will go straight up, and this would actually be this. The dragon's eye measurement tends to be something similar to this. I know it's off topic. Okay, I'm going all over the place, but it's kind of fun. All right, and so this is what I'm saying. Dragon's eye will continue, and this would have been at 100,000, like what everybody was calling for way back in the day. Everybody was calling for $100,000 at November there of 2021, and guess what? Bear market started. So that's what I'm saying, that dragon's eye doesn't mean it's going to work out right away, but you need to pay attention to the 666. That's all I'm saying. The patterns I'm telling you here, they're more so of something of would and could do it, but if it's not guaranteed, if it's not giving you not guaranteed, but if it's not high certainty, If it's not dynamic like this 666, then you shouldn't put a lot of leverage on it. You shouldn't bet on it a lot, right? You should give it some space for it to play out. If it does play out, cool. If it doesn't, then whatever, right? So here, now you're at this wave four now. Wave four was down here, but now you're starting a brand new halving cycle in 2020. And let's roll this over by drawing our profile range now. So since we had a profile range here, right? So I would do this range here. Oops, that's too high. It's right where I put the line. And I would do that range, and I would do this range from where we bought here. I need to zoom in a bit more. So I did 3 profile ranges, right? If I was to trade these ranges like this, right? And even better here, man, this is the reason why you just most of the time if you just hold, it makes sense already. All right? It makes sense to just hold. So I'm gonna go from this low right here. Oh yeah, wherever it flip resistance to support, right here. I'm gonna go for this range and look at how the confluence is across the board. Okay, this is not me having any sort of special indicators. Just a bunch of lines and a bunch of one lines basically 666, and then this range for the profile right here. Okay, from this high to the previous where the level flipped to support right here. Okay, so I'm gonna keep this range here, and just look at how it respects this range perfectly fine throughout the entire time. All right, and then at this point, I'm not going to look up. I'm going to continue to chase this still. So we did our profit taking, profit taking, profit taking, profit taking there. And now we ride up into the next profile range. Oh, look at that. We entered the next profile range. Let's do it again. Oops. Let's do it again. Let's draw another vertical line and see if we're going to react to it or not. Because we need to see where the price is at, right? Whoa, what do you know? It's the beginning of the bear market. Literally the beginning of the bear market was right here. Okay? So did I know it was beginning of the bear market? It means I took profit. So when I took profit right there, it goes back into the middle line now. We're riding up into the middle line. It came back up to a high. I take profit again. So let's go right here, taking profit again. And guess what? I'm not doing any buying because why? We're not below the 666. And we're right above this profile range now down below. See this? Now I'm going to take profit again right here. But did I take profit at this low? Yeah, I did. It's bear market lows. Do I have to take profit right here at this end? It really depends. It came back to the 333 already. Does that mean I should be taking profit? If I'm not using the 333, it looks like it's still above here, and it looks like it's trying to fade, right? Looks like it's trying to fade, and it's also into this profile range. So sure, I'll take some profit right here, because I've done it over here, and over here. I can take some profit right here too. Look at how it rolls over, and it just ended after that because as soon as the 666 broke out of this and you went into price discovery, what I mean by that is this. This is what's important about this level right here, that breaking out. This was $20,000 for Bitcoin. The 666 moving average has officially broken out of $20,000. Now, if I'm to borrow against Bitcoin at an average price of $20,000, that's really, really cool. Okay? And this is exactly where DeFi and Ethereum really kicked off. So if you see how things shifted in the game, it wasn't because um, of some magical thing that happened. It happened because there was more, you know, access to like banking structures that you can do in here when Ethereum and DeFi came into play. Okay, I'm not saying it wasn't existing before. I'm just saying that this is when it really started taking off into this retracement. But does that mean it was like gonna go to 100K? It could have, like I said, it could have gone to 100K with the Dragon's Eye. But did it do so, right? And so here's the magic where you know that the bear market is about to start. I don't know if I should tell you this or not. I'll tell you anyways, because even though there's about a 99% chance that you won't do anything about it. I challenge you on that, guaranteed, because Euphoria will kick your ass. All right, unless you're following the 666. Okay, but here's the thing: When you get a divergence of a fake out to the downside, because here's what you were expecting. You're expecting it to go down. Come on, it's got to go down. And it didn't. And you got a divergence of a price faking out. This is basically a divergence. The price faking out like that when it's rolling over, and there's so much evidence that it's got you know you know more a range down here to come to, right? It's got a profile down here, a gap right here between two profiles to come to. Okay, like it's done before. Okay, it's done that before. Look at the pass. Comes back into the profile levels down below. Okay, it stays below in the profile like this. Um, this didn't do it up here. Okay, I got to go all the way back up here. Oops, that's too far. Where were we? Okay, right here. So it did come back here in this point, but only after it faked out during the July summer massacre. Okay, of course it dumped from the highs and it stayed here in the range, and then when it didn't come through this range, it just rallied off of this 333 move. When you see shit like this that go do these moves, they call these swing failures that go down like this and they don't continue downwards, but then they just swing back up. Even to get confirmation right here, this is a false move. Okay, and it danced between these larger profiles up above. There's a macro territory here to where I'm saying wave 4 ended already over here, and you're entering into a brand new wave. This is wave 1, and this is why you see so many different uh, you know profiles in this range. And it's such a large move that you had 3 profiles that you could have filled because of this continuation here, that built into this move that the 666 actually reached 50% of this entire move right away, that covered a lot of it, and your cross happened way the hell up here. All right. And so when that happened like that, your other cross, your golden cross, happened way the hell down here. So that gives you your entire range of right here. Did you know that this was going to be your range? Yes, from over here, you knew it's going to be a range if you pull it out. If you didn't know any of this stuff ahead of time, of course you're not gonna. It didn't play out yet. But this is what the range was to be working around. And so what I'm getting to now is that the bear market started right when this reached the peak, and you saw this divergence that started playing out, because this divergence right here went up into what's commonly known as that double top. Okay, to where you get a double topping formation, or even some sort of formation to where you get 2 highs that peak out like this. Okay, that just go up and touch one area twice. Okay, typical double top, double bottom kind of structure, right? So if you get one move that does this, it's because it's a huge divergence here that's trying to do like a continuation fake out, which does fake out to the upside. Like I said, fake it out to the upside and fake it out to the downside is the typical thing that you would see before a market, really takes off. And this right here is pretty similar to the um, bubble pop of 2000, the tech bubble. Okay, it's pretty similar to it, and I'm saying that because you got this. And remember, it needs an end pattern still. It still needs to do an end pattern, but you got this formation that is set up the way that it was. Okay, and so the fake out to the upside, fake out to the downside. Where was the center of it? Dragon's Eye, beautifully done right here. This is only me. This is what I like to look at. You don't need to follow any of it, but like I'm saying, Dragon's Eye are beautiful. They are beautiful. And you do know what's going to happen here and there if you actually see the Dragon's Eye the way that it is supposed to be played out to be. And there you go. There's your Dragon's Eye. Okay? And so it was perfectly rounding out the way it did. And the halfway point, exactly right where the cross was. Profile was built right in between all of it as a range. Okay, so you don't really need to look at this purple box. Just know that the middle cross. Here, let me get rid of this box temporarily so you can see the cross. And the Dragon's Eye is just there just because it's a pattern. Okay, But this is a daily time frame. The hardest thing you're going to do is try to work off a daily time frame like this. And the cross right here happens right there. So when that cross happened, remember what I said about the cross. Death cross, beginning of the end. Beginning of the end. Find the lows. Where was the lows? Oh, what do you know? You already have a profile down below. Did we know this? No. But if we drew it out from this side where we took profit because of 666 was entering the range of our distribution, and it just so happens that it's right at these lows. Did we know it's going to be 15,000? No. But we do know that it likes to go past previous support, no, previous resistance at 20,000 and go down below to find a low. And that's why we know. And remember when I said that if you're over here, when I said that if you don't know about these highs and these lows and you don't know where they're going to fall to, right? Where these are going to fall to, high to the volume profile or to the range, whatever it is, and you just pick the middle of the range. It's going to be right here. And it just so happened that it's right here. Did I know that? Of course not. Okay, I didn't know that. Neither do you. Nobody else knew. And that's what I'm saying. That this entire move right here, you can even drag this over there and look. Come on, it's not made up. This profile was drawn from where we took profit to where this low is right here. It just so happens to be the top. Okay, and it just so happens to be so much confluence with this too. There we go. You got the low. So what do you do below 666? Buy. Right? You buy it. See, I'm making this along with you, showing you this in this video. I'm not pre-made. I didn't pre-made this. The chart was empty when I came here, and we're almost to 2023 already. You see now the golden cross here, same shit. Okay, now we got to put the profile back right here. So I made a huge boo-boo. So I need to go back and get the profile back because I don't know precisely where it was at. There we go. Okay, right there. Okay, so I can get rid of this eyeball because that's just art. Okay. Anyways, we're back here again. And I'm talking about this coming back to the golden cross. Remember, parabolic, where does it start? Parabolic starts when you get this cross. When this 666 breaks above the cross of this 333. Look how tight it was. Okay. And look how it was already going parabolic. Why does it go parabolic? Why does it need to be such big moves? Because it needs to drag these bigger moving averages up, and it takes these kind of candles to move these kind of averages. And here we go. Look at Bitcoin go. Way the hell back into this up. Even the resistance was right here previously. You want to see the magic of it? The resistance of this was right when this was breaking into close to the average. It didn't get into the average, probably because we didn't draw the average, the profile correctly, but it still got into an area of resistance here to where this was actually close to the area up top. Oh shit. Anyways, so right here is what I mean by entering the zone. So now that this is entering the profile range again, look what happens. What do you know? Did we not nail 73K top? Yes, we did. I didn't nail it. 666 did. There we go. TP. Loving it. Right? Did you know this is going to be a TP? Yeah, because TP is when you kind of enter this range, right? You know? So you TP there. And guess what? It's just nothing but distribution from this point. Because why? Because the average is in the distribution. Beautiful, isn't it? Okay? And like what I said before, previous price action before fractalizes and manifests in the same price action the moment that the 666 is averaging into it. Look at this range that we built, and look at all these ranges that we were inside of this rate profile range. This is why I was playing all this out. It's all distribution. It's all just selling. Lower highs, lower highs, lower highs, lower lows the entire time. Okay. And as soon as you got up to this point where you got the cross here we go. Bottomed out. This is where it gets even more amazing. So you can even take profit here. Here, remember, take profit in the middle too. Look at that, another top. What do you know? Double top narrative now, right? Look at that. That led you to a sustained crash that took you to the lowest point, which flipped it to support to resistance. No, resistance to support. And you get the SR flip right here, the SR flip. You get the support flip to resistance. And you know what? Did you catch that very bottom right here? No, you don't have to, right? It's a 333. Do you have to buy it? You could if you're using 333, if you believe in it, but 333 doesn't have all that much weight overall. Like this, if you bought it here, you would have been screwed, right? That's why you go off 666. Okay, and so it's best if you don't do anything about this and you go off of the continuation of this move. So here's how it goes: you go up, 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 and you take profit here again when it breaks through, right? Take some profit here again when it breaks through. Now you have this range that you're working with anyways. And here, you broke out of it. Did it continue? Yeah. And so to like overall just like go back and look at how this is. It's three profit taking zones that you could take your profit, which you could split it up into like 10%, 10%, 10%, right? Or you can split up to 1%, 1%, 1%, whatever the case is, depending on how much you want to do, right? Or I don't know how much that is you'll be looking at. Um, and it could just be areas of interest where you could start entering shorts too. Because at this point, back in 2024, there was a lot of exchanges that you can, start leveraging on, right? I'm not saying do it. I'm saying you don't have to if you're doing this, but this does give you a huge advantage. Some of my biggest, shorts and longs that are over 500, 700, 1,000% is because of this. And did I have to share this? Of course not, because this to me, it's not for the person, a normal person to look at it and go, oh yeah, this works. I'm gonna look at it and they're gonna go, it's it's all like fluffy made up shit. It's not like legit because it's not technical enough. And we like to make things overcomplicated. All right. I'm telling you that the opposite effect is going to work better. If you go talk to anybody who's any sort of veteran in this space or even in any sort of like in this industry at all, they'll tell you about simplicity wins. Okay. And this is why I'm telling you that. But to start up, I was the most technical person that didn't look at things as being easy. But that's a self-belief system that you got to get rid of. If you keep thinking that things are extremely hard, you're going to learn the hard way. And that's what I'm saying. I'm not saying to keep believing that things are easy. I'm not saying that. I'm saying that leave the door open for possibilities. Okay? And that's what I want you to take away from this 666. And now we're up to the date that we're at. So now I can go into a live video. If you made it through this, you're now going to get the daily view of how this can actually be used on the right, on this time frame. And here, this is my analysis for the daily chart now. Okay, SR flip right here. Okay, SR flip, of course, broke out. Continuation. 666 is going. We no longer have a what? Profile range. Isn't that fun? Price discovery, baby. What do you think happened last time in price discovery? Here you go. Let's just go back. Why am I going back? Because it's nothing but repeating fractals over and over and over. And if you're talking about like why is it diminishing returns then? That's just how it is when numbers get bigger and bigger and bigger. But those numbers get bigger and bigger like that, but the average gets better and better and better. That's the key. Keep an eye on the average. The average is where all the real math is done. All right? And so here we go. Watch this rise up. Price discovery. Did we know about any of this stuff? Let's find the real price discovery, like right here, breaking 20,000. When we got into price discovery here, because we are in a having breakout point where we are right now in the cycle. So if you're asking if the cycle's over, far from over. It's about to come to its fireworks. All right. So we're about to start, and I'm telling you this right now. So, I'll fall on my sword if I'm wrong, but I'm telling you that if I'm right about this again, it's because I wasn't right. It was because I called the right average. That's it. Doesn't make me any right. 666 breaking out right here. Same thing like what we kind of look like right now. Climb, 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 climb. Break out, right? But we're already above that. So here, what happened when we were at 69K? Same thing. We climbed up. 69K broke. Moving average is above 69K now, and it's going above. So it's a slow climb, and it's going to take maybe a few more days. But here's what I've learned. I've learned that it's going to take about 30 $800 per day of price increases to keep bringing this up into a certain level of a middle point like this. I'm saying that this middle point is right here, where you had the most confluence of price trading ranges. So I'm gonna put a short profile. This is only for analysis purposes. It's not going to be something based on style or strategy, because the strategy, like I said, as simple as it is, 666. What is the trend going right now? Up. We don't have any sort of divergence. It's a smooth climb. All right. So what I'm looking for here is a. Sorry, I'm really trying to find this rectangle. Okay, the range, and I want this middle of this range to be exactly what it is. Okay, to be exactly where I'm going to deal with this range as it comes. And here's the thing. Doesn't mean I'm going to take profit. I'm entering this range. It means I'm expecting price to react to this range as similar to a profit taking zone, but it's not going to be the top. Why is it not going to be the top? Because this is price discovery, and price discovery ends up like this. Okay, continuations like this. We could end up with this. We could end up with something similar to where it was like this, to where you could see one wave, two wave, three wave, four wave, fifth wave fake drop. We could see that. We could see this range like this, and it's getting close to what it looks like over there, but this only happens when you're way above previous highs. 2017's previous high resistance broke out, moving average broke out right here. It didn't break out yet. It broke out of what do you call it? The 2019, and then it went parabolic, of course, climbing up like that, and then it finally hit the profile range, which was the 2020 high range, profile range, which topped out already. By the time it got to the profile range, it already dumped down, right? But when it dumped down, it was nothing but a liquidity grab before it faked out to the upside and then rolled over into the bear market, which is one of the biggest classic traditional divergence ones that goes up and down into a massive dump, right? So this is what I mean by is it going to do this again? It's hard to tell because the reason why is because the averages aren't even there yet, right? This is why you don't need to try to predict. And when I go back and look, and this is me processing things in real time, so you're kind of learning how I'm processing things. You don't have to do it the same way. Nobody ever does have to do it the same way, but it'll give you some better insight on what it is here because it's going to be seen from a different perspective. Take what you can, do what you will. I'm giving you this as a gift, all right, and to just grow my channel, right? So if you like what you're seeing here, just subscribe. Okay, subscribe, and you're gonna get more of this because this isn't all of it. There's so much more. I can only fit it into this, and this already is like a very long video. Okay, because I went through the entire history of it from the beginning. Okay, and since history class is over, and now we're in the real time, you know, date. I'm telling you that this profile range is already respected. Look at this flip. But the thing is that the price is getting tighter and tighter in a squeeze. So when I'm telling you this is to me, I'm going to get rid of this box first. I'll get rid of this line too. You're going to have to draw these lines on your own if you want to see it because it's just really getting in the way at this point. Okay. And I'll get rid of these vertical lines too because we know what the 666 already did, and we know what the profit taking was already done. If you were profit taking right here, you would have had to buy again somewhere. Okay. So to me, what this is starting to really look like and what this is starting to make it seem like it's getting a lot more scary is because you got same kind of similar 333 divergence that you're dealing with at this point. Except it didn't go into bear market this time. It just kept going. And so this is what I'm saying, that you're getting these divergences. It doesn't mean it's going to go into bear market. It means this is momentum. You got 1, 2, 3. Typical one is the 4th. Okay. Typical one is the 4th that would pull back and actually literally like break through. Those are technicals though. Okay. And these are just analytical ideas. It doesn't mean it's going to happen. What is the 666 telling me? Just wait. Just wait until we get to right here. Okay. And it's just really interesting on to me because there's been a lot of word on the street that 92K is where the price is probably going to go, or even 93K. Okay. And I'm not saying it's going to go there yet. Why? Because this hasn't gotten there yet. And the reason why it hasn't gotten there yet is because price isn't climbing there with a candle big enough to drag it up. And if you look at this point right here, let me get rid of these guys too so that we can make things a lot more cleaner. And try to keep your chart clean, all right? Like you keep your chart clean, it's just more simpler. Okay, like these profiles down here, I can get rid of them all too. We don't really technically have to have it. It's just there to tell the story, right? So let me get rid of all of this. Okay, and get rid of all this shit. We don't need this. Actually, get rid of everything. Where are we at? Yeah. Remove all 23 drawings. There we go. All right. So if you want more, rewind back. If you want to see where I put lines, whatever you want to do, you can rewind it back. So here we go. The reason why I'm saying that this is continuing up like the way it is, and it's starting to look pretty interesting because of a dragon's eye. And when I say dragon's eye, I'm talking about, yes, the dragon's eye. And I'm really, really fascinated by this entire thing. Okay. Yeah, I'm going back to it. This video is really not about it. And you could probably like just, you know, skip through this part. But really pay attention to this on how this is going to end up folding out if it does play out. And this is something I'm really watching. Just look how smooth it is. I'm telling you smooth like this because the reason why I'm expecting a dragon's eye is because it takes a very large candle to really move the moving averages, 666. And where's the pupil, right? I'm drawing a real time dragon's eye for you, all right? So here we go. Your pupil is right here, okay, right in the center. And you got this biggest move, right, of the dragon's eye. And it's supposed to be parabolic curve, bell curve. And of course, if you see that if this breaks out, just look how smooth it is. If this breaks out, I'm looking at the move to be a massive ass candle that's just going to shoot all the way up. Where am I measuring this to go to? We'll just do a really quick measurement. I'm not going to go into Fibonacci because Fibonacci, it requires a bit more. And this is already a lot of details that I've gone over. So we'll just go over the plain and simple retracement, right? And that's just the dragon's eye. So I like to go over this part right here. It's the pupil from this point to the lowest point, right, of the pupil, which is down here. Not the eye, from one candle high. So I need to get rid of the eyeball just to show you what it really looks like. Okay, so I'm going to take the eyeball high to the low, and I'm going to extend it from the breakout. Where are we at? Oh, look at that, 180,000. Okay, 180,000. That's just a measured move. Not guaranteed, whatever the case is. It could, you know, price action could do whatever it's going to do. I'm not going to care. What I do know is that it does require, remember this one, it does require a really big move to move these guys up. Bitcoin just happened to be doing very slow, big moves over time just to bring these up. And it's been doing it very, very well because look how smooth it's been climbing. It's not all like jittery. 333 was jittery, but 666 is pretty smooth, in my opinion. I think it's really smooth. And it actually looks as smooth as 2020 at the same time. So the same kind of price action that you would see chop up should be the similar one to here. Why? Because the profile built the same way it came up to the left. Same thing I've been repeating myself in this video. Okay. And its profile is reaching this point now. It's already entered this point. You're expecting this chop to be as consistent as this choppy range too. So what does that mean? It means you're going to do a 1, 2, 3 up. So it's like, see, 1, 2, 3 down. It's a 1, 2, 3 down. And then you're going to see an up move that goes like this. And I'm going to say this real fast because I'm expecting it to roll right over your head because it's supposed to. So if you're listening to this and you're getting it and you really want to learn it one day, you'll get it. You know, I'll go over it if you really, really want to know it. Just let me know. All right. And it's going to be 1, 2, 1, 2, 3 like this. Okay, this is 3 down. Okay, and then 4. Okay, the reason why I'm saying that is because the volume has entered, not the 666 has entered this profile range. The profile here says 1, 2, 3, run. Okay, and then it's supposed to do like that, of course. So that's why I'm expecting this to go. And you know what? It's funny is that it's actually doing something very similar to what I'm telling you right now. The reason why I'm telling you this is because, like I said, if you just go back and look at the video, every time I followed it, it just kept repeating the same kind of patterns over and over and over. Here's a one right in front of your face. This range right here, like that. Okay, that did something like that, to where it's like a 1, 2, 3 sort of like move down there. When this entered this profile, meaning that when it entered the candle range of these, this was reacting the same way. That's all I'm saying. It's nothing special. It's just how to read the 666, riding into these profile ranges that will help you expect certain, and you know, not expect, but it will help you identify the types of volatility that you're going to be seeing when it enters these, when the 666 enters these averages, though. It has to be the 666. You could try this with the 333, but it's not that accurate because it's a smaller time frame one. This is 333, right? So it needs to be more than that so that it can give it more time and more space for the candles to wiggle, right? And a really tight one, of course, is gonna not play it out precisely, or not precisely, but close enough to it, right? Yeah. And so that's what I'm saying. And then that's the end of it. This is how to read the 666. It's not that difficult. You got the video. Watch it, learn it, catch it. I have trades open already. Like I said, you're supposed to be doing what you're doing with these, with the 666, and it's gonna take you for a ride. And just look, if you never sold once and you just kept buying every single one of these dips as a DCAer, you're rich as fuck. I'm just saying, okay? You know this. Anybody that has been doing that just kept buying, you need 666 here, and they caught every single low of Bitcoin. They caught every single low of Bitcoin. Not this low, every single low of Bitcoin. Okay? I'm saying that. I'm saying that. Not this low, because this was a low. Okay? This was a low. And they still held positions from way down here. I'm just saying. It's the most, easiest, simplest setup that you can ever have anywhere. And I say I'm using Bitcoin primarily because Bitcoin's a shot caller. I could go put this on Ethereum, but Ethereum probably doesn't have as much data as Bitcoin anyways, right? I can go out to Solana. In fact, I've been using this for Solana. One of my biggest trades lately on a short, I shorted, maybe I'll post the short, but the short, it's already been closed, all right? Because we've already been pumping up. But I shorted Solana at 247, all right? 247 because 666 says so. And I was way overextended already at that point. Shorted 247, 68x, 67 or 68x. Shorted that all the way down to about that 197, 198 level, basically around that range. Certain profile down there. 1384%, 1300%. Simple as this. I'm just telling you this because I don't post my shit out like that. It's in more of the Discord group that I got it in. So if you want to see some of the setups and some of the stuff, it's in the Discord group. It's not free though. All right, it's not free because I show a lot of my secrets in there, and I'm not going to just give it out for free. So if you want to know it, that's exactly where it is. I'm giving you one of the most easiest ways. And if you like this already, you're in for a big surprise if you really want to know the bigger secrets. So that's it. Thanks for hanging out. If you made it all the way through the videos, I appreciate your time. At the same time, I'm happy to share more. I'm not just going to give it away for free, though. It's 7 years of my life, 18 hours a day at charts. I don't fuck around. All right. So that's my experience with the charts, and this is where I'm at. Not the perfect trader. I'm still learning, obviously. Okay. I'm still learning. I'm never going to stop. At the same time, it's not just Bitcoin. You could take this into S&P. You could take this 666 strategies anywhere you go, because why? The averages rule all the math. All right, and it's always going to rule all of it. I'll go over Fibonacci's and other ideas in the next video. Stay tuned. If you like this, like and subscribe, and I'll catch you guys next time. Laters.